what do you think about that quantitative easing, $600 billion for till June? It's enough? It's not enough? How's the market and the economists going to react to this?
Well, I think right now, with the numbers coming out, we saw $600 billion, so QE2, everybody's been waiting for it. I think the market's already been pricing this in. At the first initial reaction, you get the $600 billion, a little bit higher than what people were looking for. The street pretty much was forecasting about $500 billion, but then when you break it down, it's a little less on a monthly basis, so they're going to stretch it out till June, and you're looking at $75 billion per month till June if needed. So I think it's right where the street was looking for, and again, more so than anything, it's just another way for the Fed to kind of backdrop everything that's been going on and make sure that we don't have that double-dip recession people are looking for.
And the big question here, we have seen people in favor of this quantitative easing, against this. Is this going to really help the economy? It's going to be enough?
Well, I think the one thing that is probably going to do more so than anything is, listen, the government as a whole and the Fed, they're going to print more money. And when you print more money, you're going to get some weakness on the U.S. dollar. Now, for the United States, is that good? Is that bad? I can tell you who's really happy about it are all the people and all the companies in the United States that produce products, that the manufacturers, because what's going to happen is they're going to be able to export more because the dollar is going to be so weak against some of the the international currencies that they're going to be able to buy more for what they can than they could probably a few days ago. So I think right now what we're looking at is kind of a strategic plan to kind of weaken the dollar, and that's basically called currency intervention. So they're out there printing more money. The dollar is getting weaker. The main players that are probably going to benefit is going to be the consumer sectors as a whole because they're going to be able to make more manufacturing products and they're going to be able to export even more.
And what's going to happen? Do you think it's going to have any repercussion? You talk about this currency manipulation, and we have the currency war going on. How? I mean, and some analysts say that the dollar is going to lose at least 20% more of its value. How the international community is going to see this, especially with all this war with China, for example?
Yeah, without question, and they're trying to do the same thing. So it's really not just here in the U.S. You're seeing currency intervention all over the globe. I mean, the bottom line is people want their currency to be weaker, obviously with the dollar continuing to fall. And listen, not too long ago, earlier in the year, people thought that we were going to be at parity with the euro, which just really hasn't happened. And over the past few months, we really saw a big reversal there as well. So the euro is probably about like $1.37, $1.38, somewhere against that versus the U.S. dollar. But it's still to be determined. I mean, right now, what the federal government in the United States is doing is they're trying to take all means necessary, pretty much all hands on deck. What do they have to do to really defend the economy as a whole, to stimulate it, get banks to lend more because it's so cheap right now to borrow money. We had the mortgage problems, but the main factor also is there's just been no job creation. So hopefully you're getting some stimulus out there to stimulate the economy, continue to growth because we've had a tremendous move in the markets as a whole, and hopefully get the private and the public sector to start hiring again.
And what do we need exactly for does the labor market to recover at some point? Because we're still seeing like a 9.6% unemployment rate, and it seems that all the stimulus, every plan seems to fail in that front.
It's a very complicated picture. We have 9.6% unemployment. Probably the real unemployment rate is probably somewhere between 15 and 18% because you have to remember there's a lot of people that have taken lesser jobs, maybe part-time employment, doing whatever means is necessary to feed their, to feed their families, and you have a lot of people that have just given up altogether. So you look at that, plus to the fact you have a lot of companies out there with the whole Obamacare in the United States hoarding cash, the big major conglomerates just hoarding cash, sitting on the sidelines because they don't know what it's going to cost them to go out and hire employees. What's the pension ramifications? What's the insurance ramifications? So there's been no employment stimulus out there, even though you're getting all the stimulus coming into the market as a whole, and manufacturing has been great. The financials have been doing pretty well as a whole. But I think last night with the elections, getting a little bit of a shakeup with the House of Representatives, and the Senate's still going to stay. But now you're going to get a little bit of pushback on the Obamacare plan, and then we'll see how it's going to shake out down the line.
And it seems like even the economy is sluggish in the recovery. Like stock markets are doing pretty well. Can you tell us about the evolution of, for example, the Nasdaq during these couple of months?
Yeah, without question. I mean, listen, everybody's been pretty much looking at quantitative easing. And as the market started to really rebound and get back through 10,000, to the upside and continue to move 10.2, 10.3, 10.4, 10.5, what you had was all these money managers, institutions, hedge funds, and even some of the retail guys, they were so spooked out from everything, just so scared to get into the market, that you started to get a big windfall of cash come and really start to chase returns. So when you get people starting to chase returns, they buy very, very aggressively. So then you get this push up from 10,005 to 11,000 because all the sellers now move to the sidelines. You kind of have this buying coming into the market, but is it real buying based on the earnings? It's tough to say. I mean, what I can tell you is 79% out of all the S&P 500 companies that have reported since October 7th have beaten on the top line, beating on the EPS front. So I think the market may have gotten a little bit ahead of itself, but with that said, before the whole credit crisis, to back up to like the end of 2007, 2008, just keep in mind the Dow was over 13,000, the S&P 500 was over 1,400, and now we're sitting today, the S&P is just shy of 1,200. The Dow Industrial is still about 11,100, 200, depending on how we're shaking out after the Fed announcement today. So if you're looking at it from a long-term standpoint, you're like, hey, you know what? Percentage-wise, there's still room to grow to the upside. Plus, we still haven't had anybody go out and hire. We're seeing a lot of companies beat on the EPS front, but because they've been running so lean and mean, their revenues have been lower as well. So as we continue to expand, we continue to grow the economy, you get some manufacturing growing. Ford, for example, is going to pump back $850 million into the Michigan area to renovate some plants. They're going to start to hire a little bit, and I think these are the keys that we're going to look to towards early 2011. Q4 is going to be tough to really dictate here because now for the consumer sectors as a whole, we're in the holiday season, so you always get some pretty robust numbers. But I think as we exit Q4 and we really go to early 2011, you got to look at the employment area as a whole to really see now, did QE2 kind of work? Are the banks going to go out there and lending? Are people going to be able to get a mortgage to buy that house because rates are so low and housing prices are so low? But again, I harp on it a lot, and every time I talk about it, jobs, jobs, jobs is going to be the key factor to this economy.
And let's talk also about all these big companies, big techs especially, that they have all this cash in hand right now. Are they going to use this money in the near future, like maybe to try to do acquisitions, cheap acquisitions?
Well, M&A activity has been, off the charts this year, and I think a lot of that goes back to the factor that they just don't want to go and hire people. So you can look at the HPs of the world, and even the Dell made a nice cloud computing acquisition yesterday. HP and Dell, they got into a bidding war over 3PAR. So you're seeing valuations, are just basically thrown out the window. There's so much premiums paid up for these, these companies out there because it's easier to go out and buy an existing and profitable company and let the synergies kind of flow down to the bottom line than try to start up a new division from scratch, go out and hire people, go out and train them, and then if not anything, you got to pay for their benefits, you got to pay for their pensions down the line, where you go out, you buy an acquired company, you let the synergies roll down, and then what they actually do is then they go and they actually cut some people across the board. So that's why M&A has been hot, because there's so much cash, as you mentioned, sitting on the sideline, and it'll continue without question.
And what about the consumer staples sector? We are seeing also, you talk about like we are coming into holiday season, Black Friday around the corner. U.S. citizens are going to still consuming.
Yeah, I think it's the consumer sector is going to continue to expand. It's been very easy right now, especially with e-commerce. You can do more and more shopping online. You can pretty much go out and look for the best price available. You can buy generic. So the holidays are coming. People are going to go out and spend. Do they go out and buy the top of the line products that they may have in the past? Maybe, maybe not. But you can always get generics, whatever the case may be, a brand a little bit cheaper. But listen, Amazon making higher highs. Apple, listen, they are now the second largest company in the world market cap wise. With the iPad, that's been a major launch, and plus they have some new products probably coming down the line. Apple TV. So it's just telling you that if you put out a good product, everything is not as great as it was in the past, but I think the bullish sentiment in the overall economy is picking up. There's been people willing to go out and take on some more debt, and with the debt, that means they're going out and spending some more money.